Okay, hello guys and welcome back to another episode of Day in the Life. Now, today is Wednesday the 15th of September. Not done a day in the life in a little while, but you know, I've been wanting to pick up the camera this week and get something out for you. You may have noticed on the channel in the past few weeks I've been putting up like analysis videos and stuff like that to keep you guys updated and also fill you in, you know, a little bit on how we actually trade and stuff like that, because I know that we don't do that many sort of educational type videos on the channel. So hopefully going to get some more of that content out. If a lot of the regular Day in the Life watchers have enjoyed that kind of educational content, please let me know and I'll try and make sure to post more of it. But this week so far, it's been a relatively active week in the markets. I've been doing a lot of, you know, gathering stats and stuff like that for strategies that we're working on as a team in here. And I've also been in quite a few trades. So I lost a full R on euro dollar yesterday for, you know, $1,000 loss, and then made about 1.2 or 1.3 on cable.
And 5 spot 3 on the year for headline CPI, and spot 1 on the month, 4% on the year for core CPI. US CPI, just to repeat, comes in at spot 3% month on month, slightly below the spot 4% expected. Year on year comes in at 5 spot 3%, that's in line with expectations. Core CPI on the soft side comes in spot 1% on the month versus spot 3% expected, and 4% on the year versus 4 spot 2% expected.
After that, I'm now in a trade on euro yen, which is running about 1 hour in profit at the moment as well.
You just know that's going to get taken, so you might just get out where you are.
So obviously I'll be sure to keep you updated on that as we go throughout the day. So it's about 8 AM, the London session has just opened. Just sipping on my morning coffee and getting things set up for the day ahead. Now, you'll see on that screen down there to my left, that's our KB Trades and Analysis group. The first thing I usually do in the mornings is update the Trades and Analysis group on all of the, you know, emerging fundamentals in the markets to kind of set the mood of how the markets are going to be behaving for the day ahead. So I'll usually put in like an economic calendar and then a little market sort of briefing. Anything that's been going on over the Asia, just a little sort of newsletter, basically to keep all of our members updated on what's going on in the markets. So today could be a relatively interesting day depending on how this trade on euro yen plays out. I'm potentially looking to get entries on a couple other trades as well. So I'm going to get on with my morning setup and I'll catch up with you guys in a bit.
How would you play the engulfing on dollar card? Or would you just wouldn't? It's not engulfing.
Yeah, it's not an engulfing, homie.
Ergo, I wouldn't play it.
Oh, you didn't just use ergo in a sentence, did you? I'm gonna put my headphones in.
Disgusting.
Ergo.
Do you know what ergo means, Tim?
What?
It's like
Do you know what
very
ergo means?
No. That's some like...
Yeah, it's English, mate.
Mate,
so.
nobody uses ergo in a sentence in modern day Britain.
I just did.
Why though? Just say therefore.
It's a synonym for therefore. Do you know what a synonym is?
Synonym.
A cinnamon! You said, do you know what a cinnamon is? Instead of a synonym.
Yeah.
Vocabulary jokes. Jake, do you know what a cinnamon is? So it's around about 9:30. Myself and the team are fully set up and ready to go for the day. We're now just about to jump on a live Zoom call that we do every morning with our members. So in our Telegram group, we'll post a Zoom link between 9:30 and 10:30, and the members can kind of join that, and I'll break down my trading plan for the day ahead, any setups that I'm looking to get in, or, you know, management or anything like that. You know, I'll do some analysis and some forecasting of the pairs that are on my watch list. And then throughout the day, you know, if I make any management decisions or if I'm getting out of trades or getting into trades, I'll simply just chuck an update in the Trades and Analysis Telegram group. So there's a couple of promising setups on my radar for the day ahead. So we're going to get on with this members live Zoom, and I'll catch up with you guys in a bit. So it's around about midday and I've just popped out of the office for an hour to take Neve to the dentist. Now, conveniently, Neve actually works directly across the street from our trading floor. The month we moved into our new office, she landed a job in a jeweller's directly across the street, so it's super convenient. So as I say, I'm out of the office for about an hour. I'm going to spend this time getting back to Instagram messages and emails and that kind of thing. And I'm also watching this trade on Euro Yen. You can see it's pushed down, you know, we're sort of 80% of the way to target here, and I've just not been given those management opportunities. I have a stop trailed in loss to like 0.3R loss. But the trade, you know, is 80% of the way to target, and I've not had an opportunity to move that stop up into profit, which is unfortunate. But you know, it's important that we approach the markets in a consistent manner, and you know, if we don't get that management opportunity, we don't get it. It's very easy to just close out of a trade because it's very close to target, just bag that profit. But at the end of the day, those little bits of the trade that you give away will add up over time. You know, if you give away 0.2R, over 10 trades 2R, over 20 trades 4R, you know, so these little bits of profit that you give away are going to add up over time. And especially, you know, there are periods of time in the market where your edge is very slim. Your edge for a month may only be 1 or 2R. We do have months in the market where your strategy will perform poor and you maybe only make 2R for the month. So if over a number of trades you give away 0.2R, you could be giving away, you know, you could go from your strategy being positive for the month, albeit very, you know, a little bit in profit, to actually being negative or break even for the month. So it's important that we apply ourselves in a consistent manner, regardless of what our emotions or what our mind is telling us to do, right? So I'm going to get on with this. One quick message here as well, you know, if you do have questions and that kind of stuff, you want to connect with me, Instagram's the best place to do that. You know, I'm always on Instagram and kind of posting updates of what I'm getting up to throughout the day. So, oh, there's Neve. I'm always posting updates on Instagram of what I'm getting up to throughout the day. So you can contact me there. It's just at Samuel Kavanagh. And just a quick word of warning, there's loads of fake accounts of me on Instagram who will, you know, follow you first and message you and all that kind of stuff. I will never follow you first, I'll never message you, I'll never offer you any kind of crypto investments or anything like that either. So please do be careful. I'll leave a link to my Instagram in the description. But yeah, anyway, I'm gonna get on with this and then I'll catch up with you guys when I get back to the office. Okay, so it's around about 12:30 and I'm now back at the office. Now, I did end up closing out of that trade on Euro Yen on the close of the last H1 candle. I had a little bit of an exit signal. Basically, on the close of the H1 candle tends to be when I do my trade management. And at the time of the candle close, the number of pips that I was risking, you know, to my stop, to my trailed stop, versus the number of pips left to my target was just, the risk reward was just way off. And so that tends to be an exit signal for me. I have a specific ratio that I look for when I'm in trade management to determine whether to close out of the trade early or not. Now, apologies if you can hear drumming in the background. There's a guy sitting on the street outside the office, just absolutely going mental on a load of buckets, just drumming out in the middle of the street. So, nothing I can do about that. Now, while we're on the topic, in the last video, a few people had kind of wondered why I was trading on a US dollars account, given that I am in the UK. Most of you who've been following the channel for a while will know that I pretty much exclusively trade with Admiral Markets, which is a UK-based FCA regulated broker. However, a broker recently contacted me and offered me a trade account with no commission, no spreads, or sorry, no commission, no charges, and so I thought I'd give it a little bit of a try. The spreads are a little bit wider and they're not UK based, but you know, I'm always open to shopping around and seeing if I can get better deals doing business elsewhere. And after trying them out for a little while, you know, it's safe to say that I'm happy using Admiral, right? Myself and all of the KB team here use Admiral for our trading accounts. You know, withdrawal times, FCA regulation, the whole lot. I really couldn't recommend a better broker. Even the spreads are absolutely fantastic. You know, pay maybe some charges, pay some commissions, but you get much tighter spreads and better execution than any other broker in my experience. Now, If you are interested or you're looking for a new trading account, that'll be the bottom link in the description or somewhere in the description. I'll put KB's partnership link. Using that link does directly support, the channel here at KB, but we wouldn't recommend something that we don't use ourselves and that we don't think is an incredibly good service. So with all that boring stuff out the way, let's hop over onto the charts. I'll give you a little run through of this trade on Euro Yen and kind of discuss that management decision to cut that trade early as well. So we're over onto the charts now, and I'm using a trading view chart just because it allows me to sort of play through the price action candle by candle. Looking at it from the daily here, what's kind of interested me about this market is, after having a relatively nice push up, we actually get failure in around these highs. Now, the traditional way of looking at the market would be, you have an impulse there, you have a correction, we're looking for another impulse, right? Bullish, we've got that kind of head and shoulders, inverse head and shoulders there as well. Looks relatively bullish. However, when you examine the price action just a little bit closer, you can see we have quite clearly had failure right in here at these highs. We've pushed to the downside, had a little bit of relief in here, and then we've actually punched lower yet again, right? I'm gonna drop down onto the H1 and look for an entry. So the day closed in around here, and what I can see is, just on this hourly time frame, is that we do have a little level of structure coming in around here, right? So you can see we've got some highs back here, some lows in here. It's really not the cleanest level, but my sort of trade idea is that we're just gonna sort of push sideways, put in perhaps a little bit of a flag or a pennant, and then drop lower, right? And so what I decide to do here is I decide to leave a limit order. So this was done at about 10 PM UK time last night, with a stop above just this shooting star here. For me, this stop is absolutely sufficient. It keeps us out of the way of all these little bits of structure in here. If the market wants to come up and kind of test this zone, that stop's perfectly safe. Again, I'm just targeting the next little level of structure I get filled throughout the night. When I'm waking up in the morning, so in a few hours after this, the market has pretty much just tracked sideways, although it is technically moving in the correct direction. We are, sort of falling to the downside there. Now, in the last few hours here, we've sort of chopped around, put in quite a few rejections, quite a few hammers and stuff like that, and then it's actually on this candle that I decided to close out with the trade. Now, I had managed to get a trailed stop to the high of this rather wide-ranging bearish engulfing here, but by the time the market gets to here, we can see that I'm risking 32 pips to make 6.7, which to me, that risk reward there just is no longer makes sense. And so it's actually at this point that I get out of that trade, right at that level in there. And then what you'll see happened is, in the next hour, we end up pushing down to target anyway. So a little bit unfortunate, definitely left a little bit of profit there on the table. However, through my testing, through my back testing, I know that this style of trade management actually saves me money over time. So it's around about 2 PM now. I've just come back from lunch, and I'm just about to jump onto Zoom and present our Wednesday afternoon workshop. Now, every second Wednesday in the afternoon, I'll present a workshop on, it could be a basic trading principle, or this afternoon is on how to implement statistics and actually backtest a trading strategy. Now, backtesting is obviously a crucial part of your edge development, especially when you're just getting to know a strategy or when you're refining and further developing it. But I'll let you see a little bit of this workshop video, and then I'll catch up with you later in the afternoon if we're doing anything interesting. MAE, maximum adverse excursion, is how far winners go against you when you're correct on the trade idea. So to give you an example, the market trades along, it fills your order, but it trades against you by 10 pips. Let's say you have a 20 pip stop, and then it trades off in your direction, turns out to be a winner. That trade went against you by 50%. So your MAE is 50%. Now, if you found that your MAE Okay, so that workshop is now out of the way. It's around about 2:30 and I'm actually just leaving that to export so that I can upload that for the members this afternoon. Now Tim is going to be presenting his trading plan for us here on the trading floor. This is something we like to do once a trader has finalized their trading plan. It gives us an opportunity for the more experienced traders on the floor to give some constructive criticism and, you know, for the trader to brainstorm ideas to further refine and advance their trading style and trading strategy as well. So I'm going to pop out to the coffee shop and grab a cappuccino, and then we're going to come back here and get on with Tim's trading plan presentation.
One or more hours acceptance, below or above the high, as accept for a round of retest. If the price instantly retest, I'll wait for a break, open the round and retest.
So it's around about 6 PM and I'm just getting ready to head to the gym and doing a little bit of prep work for tomorrow's trading day. Now today was actually, you know, a relatively successful trading day, although I did get out of Euro Yen for a small profit. Profit is profit nonetheless. You know, I'm really happy with my management and sort of adhering to my plan and my rules and all that good stuff as well. A little bit of a shorter day in the life today, guys, but if you did enjoy it, please do drop it a like and consider subscribing if you haven't already, and I'll catch you in the next one.